slowly covering the light. Pull the trigger every night to stay alive. Hope is wishing, but you're running out of time. If I could only read your mind. Read your mind. If I could only read your mind.
Yo. Alright. So all this shit in the background. Actually, pause it. Let's get the fuck out this bitch. Alright. This will be recorded as always and reposted within an hour of me ending this. This is your boy Satoshi Heavy sending it here. My bad, I was supposed to run this yesterday. I'm gonna start running them every day on Monday at noon. I was initially gonna do them at 2:30, but just in case something like that happens again, that'll make it so no matter what, if I'm called to do that, I will still have time to run this and then do that as well. So, with that, let us begin. We'll start with Bitcoin. Ethereum as always, because that's the thing I mostly track. We'll start from the highest degree. There's a few things. There's going to be kind of a higher time frame to mid time frame type thing. Won't go to the largest degree because all it really doesn't matter to this point. Because what we're trying to capture is like some decent swing moves and general things, all the stuff like that. And the two ideas I'm going to propose will. It's in a point where both of them are going to play out to a extent, but then we'll have to determine what side we want to play after they play out. Okay, so this initial idea I have right here, I'm throwing up at the top. A possibility that this is a 5-wave impulse that ended here with a ending expanding diagonal, which fits really well because this move here is 3 waves, this is 3 waves, and this seems like 3 waves. And obviously all of these are 3 waves because they were fully retraced. So, and not only that, wave 5 doesn't touch the lower boundary of 1 and 3. It doesn't have to. That's not necessarily a rule. It's just a guideline that doesn't touch it. But it does help to aid this idea. Last thing is that wave 5 is the longest. Usually in an expanding diagonal, wave 5 is going to be the longest, almost always. So all those things like, really fit the criteria that this could be an any expanding diagonal. The other idea is that this is not that, and it's just like a complex W, like either it's like a B, C here, and then this is obviously A, B, this is C here, and then this is either depending on time. Yeah, it could be a WXY. I'll label it a WXY if anything. Just because everything looks like threes. Shoot. Wrong thing. Hope you guys can hear me. It seems like you guys can. I'm gonna raise my voice. Seems like I'm a little quiet here. Hold on. Kind of rearrange my desktop area. Makes now kind of behind my monitors. So maybe that's kind of the reason why. Anyways, adjusted that. Seems like a little better here. Video is blurry. Okay, let me see one more thing. I'm gonna do two more things, okay? I'm gonna exit out of this app here. I'm gonna exit out of this. And I'm also gonna close this. And I need to take a screenshot of this one thing real quick, and I can close it out of this. Screenshot now. This is a playlist. I kind of liked, but I didn't want to save the entire thing. Just gonna go. Okay. Hopefully it's not blur anymore, but it says that we're running full 60 frames per second, 100% green bars on my side, drop frames 0%. So it's saying it's on my side I'm running really pretty much at 100%. So if it's still blurry, I'm not really sure what I could do on my end that could fix that, because it seems like everything's displaying how it should do. It should work. So my fault, Malvin, if it doesn't, or I'm sorry if it doesn't get any clearer. I'm not exactly sure what else I could do. My VPN's position in the country. Usually when I have my VPN out of country, like in Germany or one of the other places, whatever you want to call it, usually the stream is laggy and stuff like that. But I have a position in the United States, so it should be as it sees on my end, all green bars, 60 frames per second. They're only using 5% CPU, 0 drop frames. So, anyways, I'll try to be, and I will post at the end of the stream. I will post the highest time frame chart we go over, which will probably be daily. So, with my two ideas, again, I'm not too positive what exactly this is going to be. The reason why I say that is because two things. This could maybe possibly be a weird ass any expanding diagonal. The other idea is that this is a running flat, not running flat, just a flat here, which works as well. And this ends up being a WXY, which works. The only thing that's really rare about this is you very rarely get a double zigzag, and we got that here, I think. Very rare. But yeah, that's what we got, but it does happen. So the two things I will say from this point here, I'm pretty damn confident that from this low to this high is a 5 of impulse. And it's trying to figure out what's going to happen beyond that, okay? So let's delete some things. That's going to stay there. That's going to get deleted. Same with that. This. I want to delete everything so we don't get any visual bias in terms of a count on the higher time frame. Like, we have a bias to a point, but as of right now, we're in a limbo mode. We're in a point where it could do, both sides could play out for like 1 or 2 pivots, and then after that second pivot, we'll really figure out where we're gonna go in price for probably like a very, very long time too, like probably 5 months, honestly. So, so both ideas dictate that this high is a 5-wave impulse, and I agree with that because either this is a flat, and a flat could be a 3, which I really strongly believe this was a 3-way pattern. A, B, and then this is a diagonal actually that played out. And if you don't believe me, it's a diagonal. Wave 3 can never be the shortest, so this is wave 3 right here. This is a flat that played out in the middle. It's hard for you to see it right here in this time frame, so let's just go over here real quick. This is very clearly a flat. Why? From this high to this, low here, that's 5 waves. 1, 2, 3, 4, 5. That's 5. So this has to be a flat. That has to be a flat. So when you do the actual measurements, wave 3 is not the shortest. Here's a 1, 1, 3. This is very clearly a 5-wave impulse. 1, 2, 3, 4, 5. Very clearly a 5-wave impulse, right? So this is very logically A, B, C. 3-wave A, B, C. C. So that's 3 waves, right? So if you know that's 3 waves, that again, unfortunately, leaves the Pandora box open with both sides, because with this being 3 waves, then we could logically assume this could be a 5-wave expanding diagonal, but we could also assume this could be just a weird complex B wave with this now current pattern being a completed 5-wave impulse that finishes a logical flat, which logical flats are made of 3s, and then 5 waves. Or this could be a triangle. Very rarely it's a triangle. This could, I don't know if the first one, hold on, let me double check that rule. Yeah, even this could be a triangle. A wave could be a triangle, and then B wave with 3-wave pattern, 5 waves, you know. Flats come in a lot of patterns, but essentially this right here, if someone were to say, I agree, I think this is a pattern, this is a flat, and we're going lower, we cannot refute that argument right now. We cannot say for certain they're wrong, because it's possible it could be right based on everything we're figuring out right now. And the biggest thing for me that makes me like, it's the reason why both sides are in limbo in terms of what could be true or not, is because so far as the top side, to me, it looks very eerily like a leading, or not, I'm not going to say leading or ending diagonal. I'm just going to say diagonal. Because right now we really don't have a strong higher time frame bias unless, you know, we think of other things right now, which we'll cover as we go on to this thing. It's not going to be a short live stream, unfortunately. It's probably at least run 30 to 45 minutes, okay? And that's why we don't need to stick to a few pairs, which are Bitcoin, Ethereum, DXY, and SPX 100. Or SPX 500, whatever the hell it's called. And maybe NAS 100, depending on the time. So far, on Ethereum, this looks like A, B, C with the diagonal as being a diagonal C wave. 3 waves, A, B, C. And then so far, impulse down, B wave, maybe C. For sure, the fact that we broke this low could mean that this 5-wave impulse here is complete. I don't necessarily like that. The reason why is because I was looking for this divergence to play out really well. In order for that to play out, I wanted to close below this low. Well, I guess it does still play out, but let's see here. So here's that low. So I guess it does still technically work. So it's this low here. So let's draw a line. So I guess it does like a double bottom on price in terms of close, because this close we're talking about here. and this close here, which started divergence. But currently closing underneath it. If we close it underneath it, obviously this pivot is wrong. We have to now move it to this next one. Technically, as long as this low is not broken, the divergence can be true. But what I was really hoping for, like one close down here or lower to this lower range, so they're not really a double bottom and close. So we have some sort of like, let me try to show you an example. Like this one right here is a good example. It's like right here, right? We have a close. Right here was a double bottom on close, right? On price, right? Like, kind of like what we have now, right? Double bottom, right? So divergence, technically, by the book, right? Double bottom on price, essentially higher high on RSI. But I didn't like it because I want one like this. These divergences tend to play out way better than those ones. When you get to close outside of the range momentarily, but price is able to really show that divergence correctly, which divergence means like you get two, well, if you go basically on close, you know, if you get a low, then a lower low on close, but then a low and a higher low on a RSI, whatever indicator you're going to use, or oscillator you're going to use, or I guess our volume on an oscillator, but majority of the time it is an oscillator. Whatever indicator you're going to use to, you know, study that divergence, it just tends to work better when you get something like this. When you momentarily close outside of that and don't get that wick, because that wick could say you're still internal because of how fast it's happening. And that's what I'm kind of thinking that's happening here. Especially since all these are threes so far. Right? All these are threes. But I will say I'm more bullish than bearish for sure. Especially on this time frame. But I would really think and hope we could test here. I'm still in a long from earlier this morning. My stop is where I signified my team, which is below this gap here. And the reason why I have that below that gap, for two reasons. I'm not exactly positive this is the low. It could be. It could have broke this low structurally. So in accordance to Elliott Wave, we could assume, since this broke it structurally, we can finish this entire 5 of impulse, which I cannot argue. The only thing I don't like is the fact that, you know, the divergence didn't play out the way I wanted to. I really wanted divergence to close. I wanted this close here to be down here, or even below this low, at least one close, and then us to rally back inside the range and S&P this level here at 1543. But it didn't happen. We closed back inside the range, which opens that box up where we still have that one more low. But I would say, if this is truly going to be a valid diagonal, we know we got some rules. Wave 3 cannot be the shortest, since wave 1 is already the longest, or longer than this move here. If we're assuming this is the top of 4, which it can logically be, and where we would logically put it as of now, unfortunately it's way down here. But the way I study price and structures, we shouldn't fill this gap fully if we are going to reverse. Because a diagonal has to fit a certain structure, converging price lines, and descending price structures, or ascending price structures, depending if it's expanding or ending, or ending or leading. This is a converging one, so your level should start with the 1's longest, 3's the second longest, and 5's the shortest, right? But in order to do that, in order to be a confirmed one, you have to have that converging structure, right? If we were to do this and break lower like this, break all the way below this gap here, that would break this trend line here, and it wouldn't fit the entire diagonal shape anymore. So that's why I really believe this gap's not going to get entirely filled if we are truly going to do this diagonal bounce. right? Because then it'll look like this. It'll go 1, 2, 3, 4, and then 5, and then it'll look like that, right? Which this isn't touch here. So you can't logically say that's a converging triangle or diagonal, whatever you want to call it like that. So that's why I think it'd be a very easy stop placement, because if we have enough in liquidity filled to send us higher, we shouldn't have to fill this completely, or even, like, I would say fill it and close underneath it. So I think any stop below this level here is very logical. And even if we are to rally again one more lower, I don't think we would break 1519, especially on our close. Okay, so that's why I think this idea here would work. Is going to work pretty well. Let's go. Probably fill it halfway, like 1526, 1525, and then probably get a bounce. Okay, if we start trading above today's current open at 1566, I'll probably start leaning bullishly. But for now, we're still trading underneath it, so it just seems like we're probably gonna finish out this diagonal A, B, C, something like that. This will be 5 here, C, 5, something like that, you know. That's what it seems like it's going to happen. Start trading below, above this level on the hourly time frame, 1566, I will start swinging the other way. But for now, thank you, appreciate it, brother. But for now, I really think we'll test lower, okay? I really do think so, for now. I don't really necessarily think it's a trade, especially for the time frame we're analyzing right now, which is kind of like a swing trade in a way. It'll be at least a multi-day trade for sure, not a day trade. The time frame we're analyzing will focus on like a multi-day trade, not really a swing trade, because a swing trade is like a week, I guess, or more. This will probably be like a 3-day hold, 4-day hold, if this is going to play out the correct way. So the setup will end up looking similar to like this. Stop's going to be somewhere. I'll probably put out this close here. And then your minimum target, because right now, you guys, again, we don't know for certain what's going to happen. We could, based on other things we could find on like higher time frame charts, either using Elliott wave, volume analysis, or just like harmonics, or whatever you want to determine, fundamental analysis, things we read in like fundamentals, like book numbers. Maybe we know a word of the grapevine type thing about the SEC stuff, or the likelihood of things falling through with the SEC stuff. You know, whatever you want to base your higher time frame, I guess. What you call at this point, it'd be a investor type of a trade, because this is going to determine at least 6 months of price action, in my opinion. This next week or two. I strongly believe that. I strongly believe that. Okay. So, at a bare minimum, we know we got 5 waves down, so we know some rules if this is going to happen. We have rules, right? After every 5 waves, at a bare minimum, we're always going to get at least a 3-wave corrective rally. At a bare minimum, always. And at a maximum, we will get a 5-wave impulsive rally. So based on that logic, we could assume 2 things. We already know, in order for it to be a logical impulse, not logical impulse, a logical corrective rally, which will be a 3-wave rally, it has to meet certain criteria, which is usually that 1-to-1, that 1/3 rule of 1-to-1 based on price and time, or time. So if this is wave 1 coming down in a 5-wave diagonal, we know. Sorry about this. We know, say we get here to like roughly 1529, right? We bounce, we drop to 1529, partially fill this lower gap here at the 4-hour gap here, and then bounce, right? We know at a bare minimum, we should assume it has to hit 1/3 of price of the current move is correcting, which this will be the move that's correcting because this is a 5-way pattern. 1, 2, 3, 4, 5. We know these rules have to play out. So I'm gonna change this color because it should be purple for me. That's just the way my colors are. So this is 1/3 of price. We're also gonna label the hotspot of price, which will be the golden pocket. The golden pocket is probably the most common retrace point, especially for waves 1, 2, A, B. Because you have to understand that usually when those waves are forming, it's coming at the height of momentum shift. So it goes, it's at right after the climax of the prior trend. And when you think about it, that climax happens when everybody's leaning towards the wrong side of what's about to happen. So while all those emotions, all that momentum still lingering, it causes price to really rally hard and retrace a lot of the first move most of the time. And that's why a lot of people get suckered in at the worst time possible, or like which will be wave 5 or wave B or wave 2 of the other side, which is what we're trying to figure out what's going to happen. So this is why it's very common for this golden box here to get hit, which is 0.68 and 0.618 between those two levels. Now, how do we understand if this is going to end up being a bullish, you know, like maybe this is like a weird A, B, C, like flat, and this is the ending diagonal? Because right now, again, we don't know if this is going to be an ending diagonal or a leading diagonal. We can only assume. Okay? I think it's a leading diagonal, but again, we'll figure it out as time progresses. Because I believe this high is the 5-wave impulse. Okay? I do believe that. So based on that, if we get to this point, we rally all the way up and start closing above this golden pocket, and especially if we break this level here, which is a 786 for me. I know you're wondering, why is everything white? It's just I remember everything. So this is my 786 level on the opposite side, right? So if we break that level and start closing above the golden pocket, we know for probably like an 80% certainty to 85% certainty that this is going to be a 1. I mean, not 1. This is going to be an ending diagonal. This is going to be a 1, 2, and this is going to be a 3. Impulse to the top side. Okay? But that's only if that happens in that order. Okay? We have to break that 786 level and then start closing above that golden pocket. And about 80% of the time, you can know that this is actually going to break up to the top side. Okay? I don't think that's going to happen. This is what I think is going to happen. Leave that level there. I don't know why it's purple. It's weird. This is what I think is going to happen. I think, at a minimum, we could go here, sure, or we could rally from here. If we just start rallying from here, again, I'm in a small long. I'll be pretty salty if we rally hard from here because then I wouldn't like really make the money I want to make. I have an alert set for closing above the day they open, so I'll know pretty quickly to probably hopefully add to it before price really explodes. But I do think we're gonna drop down one leg, get to that 1530, 1525 level, and then bounce. From that bounce, I think we're gonna come up. S&P these last two lows, get above yesterday's open. And then at this point, I think the open will probably happen, like tomorrow's open, which is going to happen in the next 4 hours. It'll probably be on its lower side. And then price will quickly spring, rally up over that close, rally over yesterday's close open at 1566. And then maybe break or test yesterday's highs, but it'll definitely test today's highs, which is at now, I think, 1572. If we sweep both those highs, then it's very, very likely that what we're thinking is going to be true. It's going to be a pullback for a B or A wave. And then this is where we're going to really figure out if we're right or wrong. Okay. I would definitely take profit at this high here. Okay, my bias at a middle time frame is this is a 5th wave pattern that ends. This looks like a 5-wave diagonal. 5-wave impulses only happen in very specific areas. A waves and impulses. Literally the only 2 waves, or C waves too. But we're talking about a leading diagonal at this point. So they only happen in 2 places. Wave 1 and waves A. If it's going to be a wave, then we know it's going to be a zigzag. If it's going to be a wave 1, we know it's going to be an impulse. But both things will get us to the same point. They will not close above this golden pocket. They will not. They will not do that. It will most likely stay below this area. Again, that's why the close is very important about this level. Especially if we hit this level, I'm 100% throwing it out that I'm wrong and we're going up. If it's going to be this zigzag. Because a zigzag, it has to hold a specific price structure. It has to be a zigzag. It has to go like this. It can't go like this. That's a flat. Zigzag, flat. Zigzag. That could be a flat. You know, so zigzags happen in specific areas. No, not specific areas, specific structures. It has to be, right? So this is why the 6-8 level, the 6 golden pocket is very important. My mentors, Glenn Neely, he's very specific that if you start closing above that 6-8 level, you're not messing with a flat anymore. You're messing with either a zigzag or an impulse. You're most likely messing with a flat, or you're actually breaking out, and the entire idea you have is going to be wrong. Okay? So, rally up, come here. I think we'll try to fill this gap. These white areas I have on a price chart will always be gaps. All my white areas are gaps. It doesn't matter if they're bullish gaps or bearish gaps. All they are gaps. And all gaps mean is that at some point, price wants to fill them. We don't know when, we don't know how, but we can base our logic on how we know gaps, how we know gaps fill are, I guess, or what they mean to the price. Price wants to fill them. They're inefficiencies in price. And price doesn't like inefficiencies. The chart don't like inefficiencies. The algos don't like inefficiencies. They want to fill those inefficiencies. And the only time gaps get filled is when you don't have enough liquidity to continue the current trend, and so it searches for those inefficiencies to fill the liquidity to send price higher or lower. So I think we're going to rally up here. So my trades, I propose for Ethereum, this one here, something like this, stop in this area here. I think a logical stop will probably be below the close, an open of that candle we're working this gap in, which is at 1508. So anything below 1508.75 would probably be a logical stop. If one's like trying to work a really, really tight stop, one can get away with probably one at below 1519. I'll say 1518, 1517 would probably be the lowest or the highest stop I propose for this. That's risking it because we could wick through this entire gap and be logical still. The biggest thing is we need to really close inside of this lower trend line I have drawn. That's connecting the points of proposed wave 1 and wave 3, which is now this dotted line here. We 100% need to close everything above that trend line. If we don't, this idea is wrong. But we can wick below this area and be logical. I don't think it should, based on everything I've studied in the past and how things usually work out and play out. Usually they don't do that. I would say the lowest or its highest stop I would put would be below 1518 because the 2 algos for a 5th wave in a diagonal compared to wave 3 to 4 is your 0.5 and your golden pocket. Not golden, but your 6/8 extension. So here's your 0.5 extension, which is half of the price of wave 3. And here's your golden pocket area. But I don't think it'll do that. Just what I've seen with the gaps, how usually structures play out, I'll be very, very surprised if we just go all the way down here and then somehow miraculously close in that area. I'll be so surprised. Like I would be very, very, very perplexed. To me, that would not make sense. So that's why I would say and argue maybe 15-18. I'm gonna set mine for this position. I have a partial win, but it's only like 25% of what I normally lose. Normally trade with. So I'm gonna have ladders in this area all the way down to the lowest, probably be 15-17-30. Stop here at 1508, 58, and the minimum target will be a 3-1, which is perfect because I really want this high to be taken out here. So I'll probably put it right above that to make the 3-1 at 1592. And then from there, exit with at least 80 to 90%, and then really see what's going to happen. Because I think what's going to happen, we're going to rally. B, rally. Come up in this area, probably hit this order block here on this 4-hour time frame. And then reject it. And this will be my area of interest for a short. It'll look like this. Stop here at that 76 level. And this will target this gap down here. And again, at a bare minimum, I really, really strongly believe. Really, really, really strongly believe. Oh, my freaking alarms are going off. What the hell's going on here? So it looks like what I told was going to happen is happening. This little B wave coming down this area makes sense. So again, at a bare minimum, I think this is going to be an ABC. A, B, C. At a maximum, it could be a 1, 2, and then a super nuke 3. We know the line in the sand for me is, or I think for everybody, should be 1349. 1349. I really believe that. If we sustain 1349, I think we're going to be very, very bullish for a long time. If we lose 1349, I think this entire thing is a flat. This entire huge thing is a flat. If we lose that level like this. Okay? For now, the way I look at the dollar, I would argue we're more bullish. But I'm not sure. Because that means one thing has to stay prominent, which is, or like true, which is the dollar being the world power, like the world currency, I guess, world power currency, whatever you want to call it. Because all this is doing, all this study I have right now is based on the idea that this is a 5-wave impulse, and there's always going to be that correlation of inverse correlation between the U.S. dollar and Bitcoin. But if that stops working, and the U.S. like loses as well as like the currency value, what do you want to call it? This is what I think is going to happen. A, B, C. I do hardly believe that. Really, really believe that. Really do. Now it's just figuring out how exactly it's going to happen, play out. But I want to say we want to be bullish. But we'll see how time progresses. To me, I think this is going to end up being over pretty soon. We get this here, and then probably one more rally, which fits everything I need to see on this side. Though this is really that's literally what I want to see, because that'll cause their initial bounce down. What I'm talking about would cause this little run up we're looking for here, and then when they make that final rally, I just labeled right here, this one here, and the dollar makes this final rally here. That should be for us. This rally, not this one. I really want to believe we're going to be bullish, but again, this is a lot longer and a higher time frame type of thinking. Okay, so just be mindful about that. Let's delete some things. I don't need everything here. Yeah, so when they make that last run up, this will be, for us, it'll be this move here. We'll be doing this, deuce. And when they make that final climax of that run up, this will be our climax for a run down. And this, at a minimum, should be a three-wave rally to the high side. Yeah, that's the idea, though. Okay, let's talk about Bitcoin, but it's gonna be doing much of the same thing. Honestly, I really believe they're gonna do the exact same thing. Honestly, I really do. I did y'all a favor and deleted mostly everything on this chart already. Again, we're not really sure what we're in. If this is a flat like this, or even just like an ABC. Shit. Or even just like an ABC like this. We're not sure yet. We can only draw levels that we know are logical and base structure and time and price on that. For Bitcoin, it's going to be that level here, our main level support. We have a gap on this weekly time frame from here to here. Ooh. From here to here, we have this weekly gap. We're running at what, 48 minutes, so we're gonna probably move a little bit faster, because again, this can be very similar to Ethereum. Bitcoin and Ethereum move very similar in structure. Their counts sometimes vary, but in structure, 95 to 98% of the time, they're gonna be the same. Okay, we're not sure. This is a giant flat or an impulse, or this is the start of a new three-way drive to the high side. We don't know that. We have no idea. Again, I lean bullishly based on the way DXY looks. And another thing here too as well. Let's see here. Ooh, I thought it did hit 20. I thought I did hit it. 19. I thought we did break 80 RSI on the weekly, but we didn't. That is kind of concerning. I think only it did on Ethereum. Okay, I'll say this though, because daily also holds some weight. The fact that we didn't break 20 here, but we broke 80 here, and we so far haven't broken 20 here. I don't know if you guys know anything about range rules, but this is why these two levels are here. So once 20 is broken on the low side, you assume the very next hidden divergence is going to be a true divergence, going to go lower. Okay? Same thing on the high side. If you break 80 RSI, you assume that your next hidden divergence is going to be true. It's going to send you higher. Okay? Well, we broke 80 RSI here, right? Made a hidden divergence. We did go higher. Okay, now we have this regular divergence, right? We got 0, we got 1, we got 2. So from this movement to this low side to this high side, here's 0, 1, 2. We already know divergence played out true because this is something I studied initially when it first happened. This is our X pivot here. We know we're closing below that. So we know in order for this divergence to play out falsely, we have to close above this level. But I don't think it's going to happen. I think it's going to do exactly what I've been assuming. Made this 5-wave rally down. We have this hidden divergence playing out now too, right? So 0, 1, 2. Here's your X pivot for the hidden divergence, which literally lines up with the regular divergence that played out. So here's the level that price needs to close above in order to let this hidden divergence here play out and say what I think is going to happen. It won't happen. But again, what I really truly believe is that we have finished a 5-wave rally to the high side. What I don't know is on the higher time frame what exactly is going to play out. On the middle time frame, the way it looks like to me that we rallied 5 waves down. Therefore, I know what should happen logically. 3-wave rally or a 5-wave impulse to the high side. I don't think it's going to happen with the 5-wave impulse to the high side because of what I'm studying right here on this time frame, which looks like a 5-wave rally to the high side. Which, since we did that, we need a certain amount of time and price to correct in order to say we're logically done. And I told you guys this earlier. It's 1/3 plus or minus. It's a 1-to-1 of time and price plus or minus 1/3. Okay. Obviously, this is not done enough in price or time or structure to say this is done. Plus, it's a 5-wave pattern. So we know a 5-wave pattern cannot be the only part of a correction. It has to be a section of the correction, either a 5-3-5 or a 3-3-5 or 3-3-5. Okay. Rally into this area here, which is also the golden box retrace. I guarantee it for Bitcoin. So that X pivot also plays pretty well with that golden box. See if we see anything else. There's actually a gap here that's going to want to get filled, which makes a lot of sense. There's no other gaps here on the daily for time frame. Hit a divergence. So I'm going to be very curious to see how low we get on today. Again, I don't think I don't think we'll get really low because hold on.
Come here. Don't let him back in your room. Don't let him back in your room. Don't let him back in your room. Come on outside.
Sorry. Anyways. So, yeah, I think we're going to at least rally into this area at a bare minimum and then reject, okay? Above here, again, we have multiple reasons why we know we're wrong. The retrace rule based on Elliott wave, based on price action, this is a pretty strong order block. I know this is probably the most prominent one, but by the time this one gets close above or broken, we're going to be too late to get on a trade. So, at a bare minimum, 5-wave down. 5 waves down. We should get a 3-wave rally into this area. As a day trader, lower time frame trader, that poises for a good opportunity to get in long in this area. And then beyond that, I think this will end up being a short that will go like this down into this area and probably partially wick into this or wick below 20,407. That's the way I would see it. If this is truly going to be a 5-3-5 though, we should not get over on a close above 23,900 for sure. We should not, okay? Absolutely not. Which is, I think, is going to be the play here. So we got two very logical trade setups moving forward for the next, probably like 2 weeks, 3 weeks. We got a long scenario into the short scenario. And arguably, depending on how quick you are, how fast you are, that could be a short, and this could be a long. Okay, again, it's going to be at least a 3-wave pattern. And the maximum will be a 5-wave, which will get us above there, which I don't believe is going to happen. So, for sure, some solid, decent, I guess, swing trades. Again, to me, it's like a 3 to 5 day hold type of a trade. Maybe a week at a max. again, the way I study this with Ethereum, that this was a we're in a B right now, and now we're working on C. Seems like that's going to be playing out. Same rules apply to Bitcoin. We really don't want this lower trend line to be broken. We want to sustain it. We want to sustain converging boundaries like we are so far. Wave 3 cannot be the shortest. Therefore, we know where we're wrong, which would be here. But since we know our hot spots for wave 5 and a diagonal is between that golden box extension and that 0.5, I'll just use this. So we know those are our two most logical scenarios for a low point. We don't need to touch this lower boundary. We just need to drop and break that low again, in my opinion, to confirm this pattern. It's all looks like threes to me. This high breaks that high, so A, B, C. 3 waves, A, B, C. Complex combo, A, B, C. Very logical to me to be a diagonal here. So the trade setups for Bitcoin look very similar. There, stop to me below this low. Now it's kind of asking if you get baited, but I think that low gets protected for now based on this structure here. And then you're targeting at a minimum. For Bitcoin, it's a little bit different. It seems like the stop placements. So yeah, that would probably be it right there, roughly this. You could probably scoot away, saying 21,359 could be your stop placement, but just be wary that you could get stopped out and it still could go to your target. You always want to target at 3 to 1 R. I think this lower gap gets fully filled for sure, so that'll be our minimum target at 23,190. For Bitcoin, I would definitely want to be 100% out at 23,500, 23,600. One may argue and target 24,200, 24,100 might be, or 24 straight might be their target, but again, that's really risking it to me because it's very rare that a zigzag gets to this point. If we get to this point here, I'll be more inclined to think this is a wave 2. So if we get to this golden box, I'll think this is 1, 2, and it's about to be a huge kahuna. Because again, it's very rare that a zigzag gets that high. It usually gets to like a 0.5, between a 0.3 to a 0.5. That's usually where a zigzag gets. And if my assumption and bias is this is a wave 1 or wave A, and we're going to start a new corrective rally, we shouldn't get there. We should perform a zigzag like this, then get lower like this, really scare people, and then rally back higher. Okay? So again, we kind of covered the XY already on a higher time frame. I really think this is a leading expanding diagonal, not expanding diagonal, an ABC with an ending expanding diagonal and C wave. And at this point, we're going to rally down and cause this bounce up for us in crypto. And then beyond that, again, my highest degree idea is that we're working on a B wave. At the worst, we're working on an impulse 2. But again, I think it's going to be a B wave. It's going to cause for a lot of trickery. But I think I'm going to have to stay with this bias that whatever this is 5 waves up. And that's it. Okay? I thought I had this chart somewhere else. Let's see, hold on. So this is wrong. Just noticed that. It's been a while since I looked at the chart. Things I know. This looks like 5 waves. Let me do something real quick. Oops, wrong one. Yep, it works. So for now, to me, this most logical scenario here. A, B, C. This hits the requirement to say this could be done for an X wave. This is where you have to really figure out a bias in a higher time frame. I think what's going to happen, same thing with, let's go to the daily time frame. That looks a little bit more grim. That just happens today too. That's crazy to think about. Oh no, okay, that makes sense. They rallied a lot higher than this. Well, this fits our, this helps us in my opinion. So 1, 2, 3, 4, 5. This, I may have to let this one play out for a little bit longer. Bare minimum though, I think this is gonna do this, which fits our bias anyway. So at a maximum, like positive momentum, pretty good, decent breakout candle. Looks like a 5 down. So at a minimum, we know it's gonna get 3 waves. 1, 2, one more up maybe. What I'm looking at here is like, could this be a gigantic flat? I'm not sure yet. So we'll see how that goes. I'm gonna lay off this one a little bit here. I'll just say above 3,967, 68, we're bullish on SPX for sure. That's the line. Above that level, we're bullish. Okay. I know for a pretty damn strong fact this looks like a 5-wave pattern, so it has to be a C wave or wave 5. Has to be. Just based on the structure of this currently is taking a time a second, it has to be that. Okay. As of right now, I'm not sure if it's gonna be a true B wave, which I want to think it's gonna be now. We won't make a high point up until this area here, which again fits the idea that on crypto we should be more bullish than bearish. But we'll see. Thing goes like this, goes values higher, this, which this will be our decline in crypto too, that big decline I'm talking about after our rally we finished currently, and then one more C wave, get up to this area here, and then like that, create a gigantic flat, because I think we're in a huge, gigantic wave 4. We're not gonna get into that right now. We'll get into it like on a Sunday or something like that. I don't trade SPX like that, but it does aid to help confirm a bias. I usually just try to really stick to my Bitcoin bias, but if like my SPX bias is very heavily in line with my Bitcoin ones, then I probably will, get into a stronger position, heavier position, stuff like that, etc., etc. What else are we going to talk about? SPX, DXY, Ethereum, Bitcoin. I think that's it though. It's cool. Kind of ran longer than I wanted to. 1 minute and 1 hour. That's perfect actually. Yeah, that's perfect. I wanted to go for exactly, well, I wanted to go to 45 minutes, but it's all good. Anything y'all want to talk about for the last 5-10 minutes before I get out of here? Any questions, any concerns, anything like that? Any help, like how-tos, anything like that? If you're using any of my indicators, like our SRSI or Trade Point or anything I have ever given out to anybody, because I do a lot of giveaways to access to my indicators I've created. If anyone has any questions about any of those, obviously I'm here to help you and answer any of those questions. I'll tell you right now, my bread and butter is always going to be my SRSI. It provides me with, I feel like, insight that other indicators can't. I do obviously get access a few ways, but I always just pay attention to my socials. You can always do free access. Another one of my crowd favorites that people really like is Trade Point. which actually is really fucking phenomenal. But you have to be very patient. If you're not patient, it will not work for you. This works. SRSI works for less patient people. TradePoint works for more patient people. Let me pop up in TradePoint quick. Hold on. Which one is it? I've created a lot. It's not that one though. It's not the one I want. I'm in another one. Negative soul. Hold on. Wasn't that? Damn it, I can't find it yet. Oh, hold on. Give me a second. I thought I had... Here we are, finally. So this indicator that I just popped on my chart is actually this indicator, but on chart and with color candles and stuff like that to make it a little bit easier to see and stuff like that. And also added some like weighted moving averages, just stuff to add like bias, stuff like that. All this does is we want momentum on labels just tell you when you have a bullish engulfing candle or bearish engulfing candle. When you get engulfing candles, can help confirm an entry setup, stuff like that. You don't really need them. I will give access to basically anybody in this chat right now for this, or not chat, in this stream right now to this, or I guess any one of my indicators. Just one of them though. So SRSI or MSCS SRSI. So all this does is literally taking this here. I don't know why it's labeled that. I need to change, but. Takes this indicator here and applies it to the chart when the most logical time to short or long is based on your criteria. Your the actual trade point algorithm is here. So say if you wanted to stick this to this straight setup here, what you do, you just go to chart, and it'll be very similar. At this point, sell. The way it's tended to be used though is these two higher time frames are supposed to be they're the same exact calculation to base momentum on using SRSI in the background. So it's using SRSI momentum in the background, right? On two higher time frames. So if you set them both to the same time frame, then it'll be doing studying the same time frame, studying the same data, because they're the exact same thing. Okay, so if you wanted to run off the 4 hour time frame, trade points set up plus the momentum in the 4 hour time frame, but plus you wanted to say you only want to take trades when the weekly time frame goes bullish, well then you set this one to the 1 week, right? So at this point it'll only flashy trades when the weekly is bullish, the time frame you're studying is bullish, and TradePoint says, hey, there's a trade to be taken based on the algorithm of TradePoint. So let's just dive into a little bit of a lower time frame here. So right now, trade point time frames obviously don't want to be the chart. You could go lower, and it may poise for some good opportunities, but never really higher. You want this one to stay within the chart or lower. Time frame 2 and 3, again, based on that logic, you can assume what you want to assume. But essentially, you want to be trading with higher time frame bias, so you always want it to be at least one of them higher. So in this instance, we got trade point in chart, the momentum aspect in chart, plus the momentum of the 4-hour time frame, and dictating what we should do. So once this is bearish and this is bearish, trade point will look for shorts. Once this is bullish and this is bullish, trade point will look for longs. And they're indicated by these flashes. My fault. Not the flashes. So now that, sorry, this other one was taking the, I was like, why is the rest of the shit coming up? So once it starts going red, once you hit a yellow flash, I guess, yellow candle, that's your short criteria. That's when it's telling you everything's a go for a short. Both your momentum, both your time frames, momentum's bearish, and trade points at the maximum opportunity level for a short. And then you see what happened shortly after. We broke lower. Same thing here. Started flashing orange, yellow, whatever. Broke lower. Obviously, you're not going to be right all the time. Same thing here. Flash. Well, this was wrong a little bit because you really want it to be red first. But in this instance here, this was nothing. You wouldn't take this trade because it's blue first. You want it to go red first. So in this instance, not a trade, went red. Didn't go yellow, you're waiting. Red, went yellow, start shorting. Went lower. Went yellow, went lower, lost. In this instance, green means you want to look for longs. Wait, hold on, let me just double check. We don't want this on. I meant blue. So blue, the light blue, means you want to look for longs. Went blue, went higher. This was obviously a loss. But it's a pretty simple strategy indicator. Again, nothing ever works 100% of the time, especially in chop areas. This is really beneficial in times of strong momentum. Helps you really get in the most opportunistic times. Like for these, like for this scenario here, this little area here, shorting here, shorting here, shorting here, shorting here, shorting here, shorting here. Took a loss, took a long, took a long, took a long. This long probably would have been a loss. So you probably would have been targeting here. Took a long and lost. Again, nothing's ever 100%, but it does help in times of very strong momentum when you're trying to get in on pullbacks. It really does poise for very strong opportunities. And then we have the original one too again, which is the same exact thing, except it doesn't incorporate other time frames momentum. All it does is just literally take the algorithm based on trade point, which all it's doing is looking for overextensions in the current time frame based on the calculations that I used. So your squares are it's every single trade point signal. Your circles are your, let me make sure I'm saying this correctly. No, so your squares are your trade point sells or buys that's also with the momentum in that time frame. Your circles are just the algorithms buys and sells no matter what. It doesn't care about momentum. So it doesn't care if momentum is negative. If it has a buy, it's going to tell you to buy still. That's why right here you have a green candle or a green circle, but not a purple square or pink square, because momentum is bearish in this area. It's bearish. And we can probably see that here. Bearish momentum, it's telling you to short, 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 short. Flip bullish, telling you to long, which again initially it's an okay long. And I'll tell you this: if you want access to this indicator, I know we're talking a lot about this one indicator. If you want access to this one, you want to at least wait for one candle to go into your favor. Okay, so like for here, it flashed long here, right? Say if you went long here on this candle, your stop logically, you know, it'd probably be on this low here, or this low here. Well, you got to take it out. You want to at least wait for one candle in your favor. It's telling you to buy. Well, wait for a bullish candle to form. This is a pretty good engulfing candle. Target the high, right? Same thing here. Telling you to buy, bearish candle. 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 Then finally, it does not tell you to buy no more. Well, good thing because it went lower. Telling you to short here. Well, no bearish candle. Telling you to short here. Well, no bearish candle. And then finally you get the engulfing candle, which at that point you could short into it, but unfortunately that would have been a loss because you probably would have exited on these two blue squares here. But yeah, anyways, very simple, dude. Very, very simple. All it's trying to do is target high points or low points in that current time frame based on overextensions. It's super simple, but I don't use it because I just have Elliott Wave is just like this is so in tune within me that it's very hard to let go of, and RSI just tends to really work better with my wave theory and stuff like that. Because wave theory, all you're looking for is the most logical trade based on price, time, and structure, and one of the easiest ways to confirm setups is using divergence, and so RSI is really powerful in showing divergences. So that's why I use it still like that. But anyways, we'll cut it here. We'll cover Sol real quick. I think it says Sol USDT. Yeah, we'll cover Sol real quick and we'll get out of here. Okay. So I called this a major cycle top, and we broke that top. So I was wrong. I was kind of right though, because my initial idea is that we're gonna come and rally to this blue box and rally up. I didn't think it would go that high though. Where am I 5? Oh, that's why. I thought it was the Elliott Wave little thing they have, little tool, but it's just, I just used the text box tool. This is the way I see this chart here. We know gap rule, gap logic. We usually want to be filled. Here's a gap. Here's another gap. The lower gap probably won't be filled. Why? Because if our idea is going to be right, this is a pretty solid level of support based on just divergences and everything. This is an engulfing move. an impulsive move that happened in less time and complexity than this move here. At a bare minimum, this is why I want to be more bullish than bearish. At a bare minimum, we should get this. We should get this. My target would be 48 at a minimum. I would say at a minimum 39 at a bare minimum. But I would really think 48 could get tagged, honestly. This just seems very impulsive. So if we know anything about impulse, it's truly going to be an impulse or a zigzag. We know some things. It should not get to the 68% level, which is here. Which, again, fits the look we're looking for, because this level here, the green, the very logical support area. It was resistance, came, rallied through it, come down, retest that. Fits the criteria that a impulse almost will never get to this area or close, right? So I'm thinking here, here, here. And then at this point, we don't know. Okay, we don't know at that point. We have no idea. RSI is positive. Positive. I know we did briefly break 20, but this is why I believe no matter what, we're going to do this. Test that middle band. Come here. Don't break 80. Come lower. Can I really do this? Just going to happen like this. Something like that. We don't know where one starts, but it's just assuming something like that. It wouldn't be a lot. It wouldn't be wrong. It wouldn't be bearish. Like long term, it wouldn't be bearish because that's the golden pocket there. Like we don't know. Everything is like we don't know, obviously. But just assuming this here, this retrace here, would not get more than 68% of anything to be bullish or an impulse. If this gets right into the most logical area for a retrace, even if at the most maximum, which is 78 on a wick, okay, on a maximum it's there, okay. So we could assume this could be 1, 2 like that, right? So based on that, the low could be there. Here's our golden pocket for this move. Why wouldn't that be illogical for an entire thing to come down to if it's truly gonna be an impulse on the highest degree? Especially if this level is right next to, it looks like it could be the testing point of this prior high before this maximum huge breakout. So I mean, we'll see. But for me, this is my idea on the highest degree. Lowest on the midterm, I do think it's gonna happen. I do think we're gonna break this low briefly, maybe. Bounce to at least 0.5 of this current move down, and then go lower, and then that lower will be our buy. So this is where I'd expect us to turn. Between below 24.30 is where I think Sol will turn, but I think this will do this. Okay. Yeah, dude, this looks like a fucking diagonal, bro. Holy shit. Oh my lord. Sol might be the coin of the week, honestly. Because what's this rally? What's this? 20%? What's East rally? Oh yeah, Sol is a coin of the week, guys. Pay attention to Sol. We got a potential 20% rally compared to a what? If it gets this gap I'm seeing. We got 8% rally on Ethereum, but we got a 20% rally on Sol, a possibility. So I think Sol is a coin of the week. I am pretty fucking confident that this is the idol, man. It looks like freaking threes everywhere. And they're in consenting moves. Flat. 3. Flat. 3. I wish we would have broke this low, but sometimes it don't happen like that. Especially if they're baiting you, like I think they're trying to do. Because I do think whenever this low is created, it will get broken. It's gonna rally and get broken. So it makes sense to why they don't want this to get broken yet. Because their orders are here. Well, they want to get out with some profit or break even, wherever the fuck that is. So they want to sustain that before their stocks get taken. Rally, get out, sink it lower, buy back in. So yeah, Sol coin of the week. Be really starting that for this week. All right, cool. Hey, thank you guys. I appreciate y'all for tuning in, and I appreciate the kind words and stuff like that, man. I'll definitely get this. Send me your TV names in Discord or Twitter, and I will set you up. Okay. Send me your TV names, and I'll set you up. Okay. And I'll also post all of the charts to the group, and I'll also will post the highest degree time frames to Twitter. Okay. Hey. Fine. You guys are so lucky. I love you guys. Here, I'm just gonna just drop them in the fucking chat box right now, and we'll get to see all y'all updated right now. Okay, let's go. Drop them now. Let's go. Drop them. Drop them. Let's go. We got 3 minutes. Drop them. I'll play a tune. I got Carol real quick. Tell me, drop your name and what indicator you want, and I'll add you. But only if it's added right now. Okay, it has to be right now. And then by that time we'll get out. Carol, you're added. Refresh your scripts. I saw someone else say their name. I got Marama added to Satoshi Suite, Carol added to SRSI. I'm pretty sure Leo already had access to. Oh no, I got you, Leo. You're added to SRSI. Last call. Also, make sure to watch my video on YouTube explaining how to use it and what everything means on it. There's a lot that you see on this chart when you initially add it. You don't need everything. Like when you see my SRSI, mine looks very plain and Jane, right? This is not how it comes looking. It comes looking with a whole bunch of other stuff on it. And that's all just visual things that basically all tell the same thing. It just depends on how you want to visually see it, okay? I just visually like to see it in the most minimalistic type of way. And I know how divergences look like, and I know what to look for, so I don't need any of my divergence calls or lines there. Some people might need them for the first jump, but after you get a good understanding to what you're looking at, you will no longer need the divergence calls. So That's Hey, are you sure it's with an S? Hell yeah, man. Hey, best wishes, friends and family. Best wishes. Hey, all I ask is if you make it big, hey, just shout me out. Remember me. That's all I say. That's all I ask for. Yeah, run through it real quick. Real quick. Okay, one last run through of the trade plan. This it essentially works for Bitcoin too, but obviously with different prices. Same structure, different prices. Okay. The middle time frame trades we'll be looking for. I cannot say for certain, but I do think we will. By the time 5 p.m. crosses today, which by now is 3 p.m. my time, so the next 2 to 3 hours, we will do this. Take those lows out we created. Once we SFP, I would argue 1543, like that. That will confirm this shift to this upside target. But the setup would be looking like this. Along in this gap. Stop. I would argue you could put it here at 1508. I'll say 1508 to 1500 will be your stop, depending on your risk limit. I did say earlier you could probably squeeze like a 1514, I think I said. But I get, dude, that's like really like, you're like, to me it's like not even worth it to even try to risk that. So I'm gonna put mine at 1507. I'm in a partial, and I'm willing to take some down draw to add to this position. I won't just blindly add to it though. I will need to see the 4-hour time frame. First off, close down here, which will confirm this divergence we're seeing here. Because we'll get, you know, a close here, and it'll actually be a good divergence. We don't even have to close like that, but we just need. I would want us to break this low at least one more time. I'll then close and fulfill this divergence. Once that divergence is created, we could look to start buying in and adding to position. Or if you're not in position, then obviously you can just blindly add to this right now, like that. Once it dips to the 1527 level area, but don't go in fully, go in partially. Let price confirm itself. Let RSI and price agree. Once we make a low and they hold a low, we expect that low to be held. The target after that point would be, well, first of all, if you're in a partial, what you're looking for a close beyond that 1543 level. If you could do that beyond 1543, add to your position, get full lot, and at that point, if we accept 1543, your full lot position, you know, roughly be closer to this higher end. Say there, your stop can now be moved to this low that was created here, and then your target at least a 0.5 at 1610, and at a maximum at 1651. And then from 1561, looking for a short. Here's that daily gap level that we're looking for. Here's a 4-hour gap we're looking for. So your short will look like this. Since this is a 5-wave pattern so far, we know some things. We know it has to be a zigzag, a wave C, which would cause an impulse to the top side, which that's not our bias. Our bias is on a medium time frame, 3-way drive down. So since our bias is that, and we know logically, if our bias is going to be true, we will never close or even trade above this golden pocket at 1666. So our short will look like this. Stop here. I like that stop there because I don't know if you noticed this, but there's a gap here. Right there. If our logic is correct, this gap does not need to be filled. So our stop could be anywhere in this gap. I'll say middle gap's fine. Entry at the lowest point is the order block. Golden pocket. And you're targeting this low here at a minimum, which is 1464. And at a maximum, you're looking for this gap to get filled and looking for a price exit at the lower side, which would be roughly 1425. So let's label that. And those will be our targets. These three lines I just put here will be our targets for the short, which should be the better, obviously the bigger trade. So let's say right now, we just rally up like this. Well, if it just keeps going, then obviously we have to really think of things. But if we just rally up from here, which we could, and rally back, I would definitely update my team and talk about what we should be doing, okay? Because there are a few things that could happen at that point. But for now, my bias is that we're going to come down, break the most current low. That would trigger along, which we could look to add to once we accept 1543, okay? Beyond that, we'll see where our price goes, and then we'll look for a short possibility, okay? These are the two trades I'm looking for the week, for sure. Right here. Okay? For some reason, I can't find Alexandria in S. You're not popping up, man. I don't know why. Not the S part. Oh, there it is. Finally, what the heck? Oh, I had a space in there. That was weird. Got you, man. Got everybody. Everybody's added to the things they were asked to get added to. I got your... went through the ETH setup real quick one more time, and I went through the possibilities. That's a little extra flair to that. The daily gaps aren't really important right now. The 4-hour gap's more important there to the top side of here. We know this is a bias. We're looking for a sweep with this current low. We're looking for a close above 1543. If we get that sweep, add to the position. Target at 3 to 1. Target 1610, exit partially, then exit fully at 1650, and then see what happens. Okay, then from there start laddering into shorts, and then pray and hope we'll make 2 really good trades in a row. Okay, all right, thank you so much. Went way over time now, but it's all good. We started talking about some extra stuff. I hope you guys enjoy this little stream here. Definitely do this every Monday, publicly, every Monday at noon, okay? Publicly every Monday at noon. I was going to do them at 2, but there's some times where I have to get my niece out of nowhere, and so I just have to make sure I'm available for that. And I don't want to leave us hanging and stuff like that on our side, so noon's probably the best. Alright, so I catch y'all. I'll try to do one Sunday, but it'll be a little bit different than this. Okay? It'll be a little bit more teaching and stuff like that. So, I'll see you Sunday most likely, but definitely on a Monday at noon, Mountain Standard Time. Catch y'all then. Appreciate y'all. Make sure to drop a like or hit the like button. Drop a comment. Tell me what you like. Tell me what you hate. Tell me what you want more of. And I'll make sure to pay attention to those things, okay? So until next time, it's been your boy. Appreciate y'all. Satoshi motherfucking Heavy. Peace out.